Throughout the pandemic, a growing number of Canadians took out mortgages that were very large relative to their incomes at variable rates with amortizations of more than 25 years. And our model suggests that the most highly indebted households saw only a small increase in their liquid assets in that time. This brings me to our second and related vulnerability: elevated house prices. Strong demand for more living space, low interest rates, inadequate supply, increased investor activity, and expectations of future increases all made for a hot market during the pandemic. House prices rose about 50% on average since the beginning of the pandemic. As Canadians return to more normal activities and interest rates rise, we expect to see some moderation in the housing market. Indeed, this has started. Recent data indicate a marked decline in the level of resale activity from its peak. And even if house prices are up sharply on a year-over-year basis, some markets have recently seen declines. With inflation well above the 2% target and the Canadian economy overheating, the bank's #1 priority is to get inflation back to target. And we are raising interest rates to make that happen. Labor markets are very strong and household balance sheets have improved overall. The economy can handle, indeed needs, higher interest rates. And given the unsustainable strength of housing activity, some moderation in housing would be healthy. But high household debt and elevated house prices are vulnerabilities. If the economy slowed sharply and unemployment rose considerably, the combination of more highly indebted Canadians and high house prices could amplify the downturn. If those highly indebted households lose their jobs, they would likely need to reduce their spending sharply to continue servicing their mortgage. In addition, a big correction in house prices would reduce both household wealth and access to credit, particularly among the most indebted households. Were this to affect many households, it could have broader implications for the economy and the financial system. This is not what we expect to happen. Our goal is for a soft landing with inflation coming back to the 2% target, but it is a vulnerability to watch closely and manage carefully.